Hello there and welcome to my channel. I'm introducing a series of episodes on financial accounting, a series of episodes on different lessons on financial accounting that I'll be sharing with you. I'll try to be as brief as possible on these explanations. So my name is Goodson, your online tutor on financial accounting. So our first episode on our series today will be about defining accounting. Today we're going to be defining accounting. So the whole lesson is about introduction to financial accounting, and it is very ideal for beginners who want to pursue a career in accounting. I'll try to be as brief as possible and as audible as possible. For those who will be having questions, you can be posting them in the comment sections where necessary. I'll try to respond to each one of them. So enjoy. So as earlier indicated, our first lesson today is about defining accounting. What do we understand by the word accounting in our day-to-day endeavors, whether be it at school or business or at work? In one way or another, we might have heard about the word accounting. And for you as students who are interested to pursue a career in accounting, must have come across to the word accounting. But what is accounting really? Watch till the end for you to be able to understand accounting, clear the confusion that you have had. So if I'm to define accounting, I would define it as a process of recording, classifying, summarizing, and reporting financial transactions to provide a clear picture of an organization's or individual's financial health. Recording, classifying, summarizing, and reporting. What do you get from here? The main point here is accounting is not just one thing. It's a process. It's a process that involves these key aspects that I've outlined here: recording, classifying, summarizing, and reporting the financial transactions. So accounting is often referred to as the language of business. You can't run business without accounting, because accounting translates the financial data into reports that help stakeholders make informed decisions about profitability, cash flow, and financial stability of your business. So this system is crucial for managing finances, ensuring compliance, and planning for the future, as we are going to look into details. Now let us look at each of these key aspects into details and explain what it is all about. So as defined, the first aspect is about recording. So recording financial data involves systematically, I should have underlined this word, systematically, not just documenting, but systematically documenting all the financial transactions, often through a process that is known as bookkeeping. Again, most of you must have come across the word bookkeeping, and most of us confuse the word bookkeeping and accounting. So the mystery goes today. Bookkeeping is just part of accounting. In fact, it's just the first step in the process of accounting. It's basically about recording all the business transactions that you are doing as a business. We'll look at how we record these transactions in later lessons, but for now we are interested in defining accounting. And this is the first key aspect of accounting. For example, you are starting a business and you invest capital in that particular business. Just for argument's sake, you are investing a business in trading. Maybe you buy and sell things. You invest $100,000 in your business. You systematically record that transaction as part of accounting. Say I invested $100 in this business, and then you start selling. You start recording the sales. We'll look at how we record this systematically in accordance with accounting principles in due course. The second aspect of accounting is summarizing the data. Now, the recorded data is organized now into statements, the financial statements, such as the balance sheet, income statement, to provide a concise overview of the entity's financial position. Don't worry about the terms that you are hearing now. Balance sheet, income statement, you have to get used to it. You'll be hearing these terms now and again. About their definition, don't worry about them. You will learn them in due course and later lessons. This is just a definition of accounting. So the recorded data has to be organized now into statements that will provide a concise. There should be a concise overview of the entity's financial position. The third aspect of accounting is analyzing the data. So the data that is in the financial statements is then now interpreted to understand the performance, identify trends, and uncover other insights about the business as a whole. Just recording and summarizing is not enough, not give meaning to the financial transaction at all. But the data that has been recorded, summarized, it has to be interpreted so that the users of these statements understand what they want to get from the whatever we want to report. So after analyzing, we have to report. We have to report to the users, as we're going to see in due course. So the analyzed information is then communicated to the users. I've just given some of these examples here. That the users, we're talking about the stakeholders, including management, investors, and regulators. In a later lesson, we are going to look at why each of these users need the information from accountants. So we're going to look at the different user needs of financial statements. So these are the key aspects of accounting: recording the financial data systematically, then you have to summarize the data, and then we analyze it, where we are interpreting it so that the users understand the performance and other aspects of our business. Once we done that, then we have to communicate the information to the stakeholders. Moving on, I want us now to reflect on why accounting is important. I've heard many say, accounting, I don't need accounting in my business. Well, you may say so, but accounting is very important. That is why in all well-established institutions, you'll find that they have a well-established accounting function. So why is accounting important? Accounting informs decision-making. Accounting provides the data needed for strategic planning and making smarter financial decisions, as we are going to look in due course. For instance, without proper accounting, you won't be able to tell whether the business is making profit or not. That is where now accounting comes in. With proper principles and rules of how we record this data, you'll be able to tell how the business is performing. Once you know how the business is performing, you will be able now to plan accordingly and make smarter financial decisions, such as whether to expand or not, or whether to invest in a particular business or not. Another importance of accounting is that it measures performance. So accounting allows businesses to track revenue, expenses, assets, and liabilities to evaluate profitability and growth. Without a proper accounting system in any business, you won't be able to track all these important aspects of your business: revenue, expenses, assets, and liabilities. Don't worry about the definition of these terms. We're going to look at them in details later on their own and what they're all about and how you record each of these particular items. Accounting also ensures compliance. We earlier indicated some of the users of financial information are regulators. So accounting helps to manage taxes, invoices, bills, and ensures the business meets legal and regulatory requirements. Without a proper accounting in a business, you have difficulties to meet some of these regulatory requirements. Accounting also builds trust. Accurate financial reports are essential for building confidence with lenders, investors, and other external parties who are the primary user of our financial statements. For instance, we're talking about lenders, banks. As a business in operations, there comes a time when you need to ask for extra funding from lenders like banks. And a bank cannot lend its funds to a business which does not have proper financial reports, because it is through these financial reports prepared by accountants that the banks are able to tell whether you have the capability to honor your obligations later or not. For investors, they would like to know whether the business is profitable or not. So that would determine whether they will be able to invest more or sell their shares in the business. And how will they know if there is no proper accounting? Now, that's where accounting comes in. It helps to track revenue, expenses, and hence evaluate the profitability and growth of an entity. These are some of the key importance of accounting. If you have more suggestions, you can add on how you think accounting is important to any business from the definition. That's all I had for you for now. So today we were simply defining accounting. I hope you enjoyed the brief. If you have not understood, you can always play back the video and listen again. Wherever you need more clarification, you can always post your question in the comment section. I will be able to answer you more. Or if you need a proper separate sessions, you can always comment in them. So thank you for now. Once again, I'm Goodson Charlie. Watch out for the next lesson where we will talk more about the users of accounting information. Thank you and goodbye.